Welcome back to Your Property Empire. Now, joining me on the show tonight is Siobhan Hayden, CEO of Mortgage and Finance Association. And as usual, we've just been joined by the great Charles Tarby, Chairman and owner of Century 21 Australasia. Good to see you both.
Thanks,
now, we've been talking about APRA for quite a while. Maybe it would be good to get your perspective on it from being inside the industry from you are. Do you want to describe to the viewers kind of what is APRA and what have they been doing to kind of screw with our property system over the last few months?
In a couple of seconds. Look, APRA is one of the key regulators. Their goal is to secure the money of depositors. So I think it's important to know where they're coming from. Their recent changes relate to increased capital holdings or increased capital for the four majors and Macquarie Bank. And that's resulted in those lenders increasing their current rates for investment lending on existing loans and also new loans. I think if you're one of those customers, obviously initially that feels painful and you're not happy with that change. But what that change will bring about is an even playing field across the lender market, which is great for all customers. So I think better competition, and additionally it's also viewed more securely by the international market. So again, that's great and favourable for the market.
So generally you think it's a pretty positive thing that they're doing?
For what they're trying to achieve, yes, which is securing of depositor
if they're
funds.
actually doing it. Yeah.
What people view it as is a curtailing of, say, the Sydney and Melbourne markets. So that's not really their agenda.
Yeah.
That's a byproduct of capping investment lending, etc., which I don't think is overly hitting the mark in certain areas. Yeah.
Now, Charles, you wear a few hats. You've got a real estate agent chain, you've got a mortgage broking arm, you're a personal investor as well, and you've got kids that are in the market as well. Depending on which hat you wear, which way would you like to go?
Well, my children fix their loans, which I was recommending for the last year anyway. They probably didn't get the best fixed rate, but they'll now be better off than most people because of the change. What APRA was trying to achieve, I'm not sure they thought that the banks might follow in that direction. I know what they were trying to do, and we've been talking about it for a long time, that it's better to have secure banks in Australia than it is to have low interest rates and people rushing into the market. So I think that what they've done is correct. I don't know whether they thought what the repercussions might be. I have a real issue with banks raising rates on home buyers. I don't have an issue with investors. I do have an issue with home buyers because they've gone in good faith looking to purchase property. They've been pretty much told by the Reserve Bank for quite some time now that it's highly unlikely rates are going to go up, they might come down. And all of a sudden, something comes out from a different direction and completely changes the whole climate for these buyers. No problem with investors, no problem with interest rates increasing. I like to see the market soften. But the way it's happened, I'm not sure is the best way it could have happened.
So what are your thoughts around there and the actual impact it's had?
Look, I appreciate what you're saying, and at the end of the day, the lenders have to come up with approximately about, I think it's calculated, $11 billion in capital. So they've done their own capital raising through their shareholders, and then in additional views, they lift it through investment and owner-occupied. But definitely, it would sting. It would be a big sting for people that have recently got into the market, and then this happens. So yeah. I think the only saving grace is that, as I mentioned before earlier, that lenders are, customers are provided with a buffer on their assessment rates to sort of work in some tolerances, and we haven't seen that rate of increase for the market.
I just don't know, because you know what it's like. It's not so much the buffer, it's what people do with the rest of their money in personal spending that causes these problems. A lot of people, unbeknown to the banks or with the assistance of the banks, will go out and buy maybe a car or some white goods, and they'll spend a little bit extra and not really thinking about that buffer. And I just think that's the part I didn't like. I do understand what it's about and why it's there. I just don't think APRA was thinking that it might extend to an owner-occupier. I'm not sure if that was on their minds when they created this platform to get banks back in line again. During the GFC, we did well because of the way in which our banks are administered and run. So I have absolutely no issue with it. It's just the way it was done. Yeah. I think it's going to cause people some grief.
Siobhan, for the MFAA and also the brokers, are there other changes that you prefer to happen or think that should happen now?
Look, I think that the cap on investment lending is one that's causing a bit of pain, predominantly for those that are looking to get into the market. And we saw earlier the showcase of property in Newcastle, and I'm a big advocate that we need more data around who are generally first homeowners, because many people, particularly younger demographic, are not not wanting to waste 2 hours a day travelling, so they'd rather rent near their place of work and buy an investment property. And this is actually curtailing that sector, and there's no real measure yet of how much of the investment market that is. So it would be good to get initially a good measure of first-time owners, whichever channel they choose to go with.
And should there be different rules for homeowners and investors? Because maybe that's what you're thinking.
Well, that's what they were trying to do. That's what they were trying to create with the LVRs. I think recently, when you look at the focus was on investors, property investors, not home buyer, owner, occupiers.
Yes.
So I think they've changed their tack a little, that's all. Yeah.
And I think lending policy should ideally support what they're trying to create in the market at any particular time. And if you look at New South Wales, I think it's universally accepted we have a housing shortage. So any policies that help facilitate additional housing stock, that's a good thing. So let's work on those sort of initiatives and potentially a high-speed train to get people in and out of the CBD quickly.
Look, it is hard though, because we've got, which you're going to explain in a minute, is we've got multiple markets all doing different things at the same time.
They are.
And you've got one policy to try and do the whole thing.
Yes.
Well, Chris, what's going to happen with, I don't know whether you heard the announcement today or the potential of a bank in China lending their customers in China a 100% to buy property in Australia. 100%, no deposit, out of China. So how do you combat that if they're going to buy off the plan and they've got 100% lending? Where are the APRA rules impact there?
It's going to be tough.
FIRB?
I know, but you know how long it's taken for FIRB to knock down just a few people.
We better jump onto your things so we can get through them. So tell us about the clearance rates.
Yeah, they've dropped obviously across the countryside. A lot of people have been concerned about the clearance rates, particularly in Sydney and Melbourne. I'm not. I think they should be where they are. The national clearance rates for auctions were 66.6%, so this time last year was 69.8%. But Sydney actually came down to 64.4%. But again, a lot of people are putting their properties on the market at a lot higher prices, and so people are sitting back saying, I'm not prepared to pay that. So I don't know if it's a true impact on the heat coming out of the market yet. I think it might be an impact of the supply and demand issue, with the supply being too high a price. Canberra was good. Adelaide was good. You talk about different markets, 74.6% for Adelaide. So pretty good overall.
Now, Tom was talking before that there's more adverts in the papers. Are you seeing more homes advertised for sale?
Yeah, we had an increase over this time last week, and this has been the pattern for a few weeks, so it was a plus 1.69% increase. But interestingly enough, we're down 1.79% in terms of the amount of stock we have today over this time last year. So it's a crazy figure.
Nice little curve on the graph there.
Oh, yes. It's, I'm not looking at the graph, I'm looking at your head. But I think the graph should be pointing upwards. I can see a reflection. Thanks. You said it, I didn't. Yes, I didn't. Yes, New Zealand also, they've had an increase 6.2% in stock this time over last week. So they've gone through, it was 12.9 last week, so that's a massive increase in stock.
And then rent price movements.
Great to see. Sydney is actually the best performer at 0.58% increase. Melbourne and Brisbane were stagnant for the week. The one I'm really impressed with is Perth. It had a climb of 0.42% because it's been struggling for a while with both its rent and its vacancy. So it looks like it's making a bit of a comeback. So we have a 0.49% increase over this time last week, but we're still negative from the start of the year, 1.2%.
And finally, the vacancy rates as well.
Good, yeah. Sydney 2.31, Melbourne 3.63, steady for a while. Here's a good one. Perth 6.14, was touched over 7 for a while. So with higher rent increases and lower vacancy rates, those three capital cities are coming in at 4.03% vacancy. So that's not too bad at all. Still okay. Perth I was worried about, but it's coming back, so it's good to see.
And 6 weeks left of the market. What's your predictions there?
Oh, I'm working over Christmas. You're talking about the rest of the industry, of course. Well, I can still see Sydney being okay. I don't see clearance rates in the 60s as being bad. If you look at most property coming on the market, Chris, agents, if they can clear 65 to 70% of every property they list for sale, they're doing really, really well. So a clearance rate of 64 or 65 for Sydney isn't bad, but overall across the country, 66.6 I think is reasonable. And it's a solid market, not crazy. I hate crazy.
That's just what you want.
Hate crazy.
Siobhan, Hayden, MFAA, thanks for joining us.
Thank
Charles
you,
Tarby, as always, good to see you. Thanks for joining us as well. Hopefully we'll see you at the Property Bar Expo if you're in Sydney. But if not, we'll see you next week. Until then, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.